Hey guys, welcome back to another video. My name is Christian, and in this video I'm going to be talking about how to invest with a minimal income. Now when I say minimal income, I mean investing into the stock market with $100 or less. Many people do believe you need to invest thousands and hundreds of dollars into the stock market in order for you to see a profit, but I'm here to tell you that's not entirely true. I'm going to be giving you guys some tips and try to push you into the right direction in order for you guys to stretch your minimal income and try to bring a lot of value and diversity into your portfolio. Now, before we start the video, I would like to take this time and ask you guys to please hit the like button and subscribe to the channel. It would really help me out. I will be posting 2 to 3 videos a week, and to make sure you guys are always updated and you never miss a thing. Now, let's get on with the video. It's really important when you start investing into the stock market to always invest consistently. It doesn't matter if you put in $30 a week or $100 a month, as long as you are investing something, as long as you're investing in yourself and in your portfolio. And by doing this, it's guaranteeing growth and a lot of potential into your portfolio. Investing into the stock market shouldn't be a financial burden on you. It should be fun watching your money grow up and down, move up and down. That's why in this video, if you follow these 2 strategies I will be explaining to you, do your research and follow through with them, you will be a step closer to achieving financial freedom. Now, my first step into investing in the stock market is investing in ETFs. And for those who don't know what ETF stands for, ETF is Extended Traded Funds. ETFs consist of many different securities that trade in the stock exchange. ETFs could be a composite of stocks, commodities, or bonds. So why are ETFs such a good investment? Since an ETF technically is considered one stock that comprises of many other stocks, automatically you're bringing a lot of diversity and value into your portfolio. You will be taking your money and putting a small amount into many different stocks. So instead of investing in one company, you will take a small percentage and put it in many different companies that pertains to that ETF. Also, the cost for an ETF is much lower than a mutual fund and an index fund. Even the great Warren Buffett has stated that investing in mutual funds, index funds, and ETFs just makes sense. It is more secured during a natural disaster or pandemic. A great example of an ETF is S&P 500 High Dividend Low Volatility ETF, ticker symbol SPHD. SPHD consists of the top 50 highest dividend yields and lowest volatility companies that are included in the SP 500. And as we speak, SPHD is trading at a very low cost of $34.06. SPHD pays their dividends every month and has a dividend yield of 5.57%. So investors with little to no income can invest in this particular ETF and watch their money grow slowly. But remember to always invest consistently. Another great ETF is Global X Super Dividend US, ticker symbol DIV. This ETF tracks the equally weighted index of 50 high dividend securities. And as we speak, DIV is trading at a low cost of $11.68 with a dividend yield of 11.52%. So many investors could buy these ETFs and watch their money grow slowly. This next strategy is a personal favorite, and this is the strategy I used when I first started my portfolio, and this is what helped me build up my portfolio to what it is investing in blue chip stocks. Blue chip stocks are companies that have had a lot of success in the past years and have the ability to operate profitably during good or bad times. With so many blue chip stocks and prices varying company to company, which ones are the correct ones for you? It's always good to do your research and invest in companies that their prices on the stock market is way less than their actual value. So you'll be investing in top quality companies at a very low price. When you are investing with minimum income, it's always good to always have a high return with a good dividend yield. So the first company I'm going to be talking about is CocaCola, ticker symbol KO. Coca-Cola has been around since 1884. I don't think Coca-Cola needs any introductions. We all know Coca-Cola is a non-alcoholic beverage drinking production company. Mouthful. And this is Warren Buffett's favorite stock. Warren Buffett has never sold a single share of Coca-Cola since he first purchased them 30 plus years ago. And right now, at the time of this video, Coca-Cola is trading at $46.85 with a dividend yield of 3.51%. Coca-Cola serves 1.3 billion 8-ounce servings of their non-alcoholic drinks worldwide daily. So I will never bet against Coca-Cola. And I do believe their value in the stock exchange is way lower than what their value actually is. The next blue chip stock I'm going to be talking about has been affected by the pandemic, but is still being profitable during all this commotion, and that company is Bank of America. Now, the whole banking industry within itself has been hit by the pandemic, but with things slowly going back to normal, I do believe Bank of America is a must buy. And this is another one of Warren Buffett's favorite stocks because he has invested $32 billion into this company. And as of now, Bank of America is trading for $24.82. And within this past month, Bank of America's value has gone up almost 10% with a dividend yield of 2.99%. This stock is the perfect example of investing in great quality companies at a very low cost. Lastly, as a brand new investor, or with a person with minimal income, it's always good to look at different companies and evaluate them through their spreadsheets and not just their dividend yield. Many people get blinded looking at the dividend yield percentage and don't look at the ROE percentage, which is the return on equity percentage. Meaning, yes, you would be getting a high dividend return every month or quarterly or yearly, but you will be losing the amount of equity you have invested into that stock. So in a way, your money's at a standstill. If anything, you are losing money if you are investing in the wrong type of companies. Some of the things you should look at before you invest into a company is their dividend yield security percentage. How long have they been paying out dividends? Have they been cutting back on dividends, or have they been increasing dividends yearly, quarterly? And you should also check their debt to asset ratio to see if the company has room to grow and expand, or if that company has reached its limits. A good dividend yield percentage will range from 3% to 4.5%. So before you start investing and putting your money into any company or any stock, you should always do your research. And this is what separates ETFs and blue chip stocks from common stocks, because they are not just common stocks. They have a proven track record and have made many people rich. So with time, patience, and investing consistently, you will be closer into reaching that financial freedom. So okay guys, I do hope this video helped you guys have a better understanding on how to invest into the stock market with minimal income. Buying ETFs and blue chip stocks have helped me grow and will continue to help me grow my portfolio as the time passes. So again, don't forget to invest consistently. Don't forget to do your research. Don't forget to hit the like button and subscribe to the channel to make sure you guys are always being updated. So if you're new to investing and you want to start investing, my Robinhood link will be down below. If you use the link and you open an account, you will get a free stock, I will get a free stock, and you will be a step closer to reaching your financial freedom. So that's it guys. Thank you all for watching. Until next time.